Hi, this is Steve All. Welcoming you to the August the 27th of 2025 Town Hall, the Wednesday before Labor Day. And I know when I was a kid, I loved, when Labor Day came. It was that last big weekend at the pool, and school would start soon after. Times have changed a little bit on it. Most people forget it's Labor Day weekend, and the pool's hard to get the people to work there because the college kids are back in college and the high school kids are now working. So it makes things a little different than it was for the bulk of us. But again, I want to thank you for showing up to it, and I want to thank those that all listened to it. We had a great time at 29029 up in Whistler, Canada, one of the most beautiful places I've been in a while. But I am not going to steal Will's thunder from the beginning of it. I'm going to allow Will to share first, and then I will come in on the backside of this town hall. So thank you all for being here.
Hi, Steve. Yeah, thank you so much for coming. It was an experience being in Whistler 29029. Like I was telling everybody, I told Steve, it pushed me physically, mentally. I love every moment. I explore myself many times. We were like walking for like the first day, probably like 12 hours, second day around 10 hours straight. So it was a great time. Uh, Now, today, continuing this educational process that I always do for the town hall, we're going to talk about two things related um, with our practice, right? The first thing is fixed index annuities. So, if you're a client, you heard about this before that we talk about. So, fixed index annuities, we're going to talk about what they are, how they work, right? But also, it's something else going around that it could affect a fixed index annuity is the rate cuts. They're looking, probably Powell is going to start cutting rates in the next meeting that will be in September. So, um, then we are going to talk about all these products and we will break it down in plain English. And probably Steve will let me do this in Spanish in the future. So, first of all, what is a fixed index annuity? We call it FIA. It's not an investment that is related with the market. You are not directly into the market. What they promise you, the insurance company that provides you this fixed index annuity, is that your money is going to be safe, right? You will not have any market losses. And your growth is linked to an index. That could be the S&P 500, or it will be other type of index that they will provide to you from the insurance. Sometimes they do have a cap, right? A cap means a limit. So if, for example, the S&P 500 makes 15% and your cap is 10%, you only will get 10%, right? If the S&P go below zero and goes -5, you do not make anything because remember, they are promising you that you will not lose any money. They also add you a participation rate, and an example will be if you're following an index and the index makes 10% and you have 50% of participation rate, it means you get 5% of that index. And again, if markets drop, you get zero. What is the math behind it? Like how, we have a lot of clients that they tell us how they can assure us that they will not lose money. So just to give you a general idea, what insurance companies do is they buy different type of bonds whenever you provide the money to them. They have high yields and they make sure that these yields produce a specific percentage. And this percentage, they utilize it to use options, right? And this will be for another call and we'll explain what options are. But these options, they allow them to take some money in the market and around they trying to actually invest it. So Your money is not actually in the market. They tell you we will follow this index, right? There's different type of fixed index annuity. We call it, there's different type of engines, but remember, they usually have a link to an index, and they have a cap, and they have a floor. The third thing is, why will the Fed cut will affect the fixed index annuities? So remember, we were talking about bonds, right? So what happens whenever the Fed start raising interest rates? What happens with the bonds? Yields of the bonds, they start increasing. So if you put a specific amount of money and the yield is really high, that allows the insurance company to buy more options for you and be able to provide you a better cap, a better options for your fixed index annuity. It will be a better product for you, right? You will see the caps that will be around 10%, 11%. Then what happens now if the Fed start cutting interest rates? That will affect the bonds. So the yields of the bond, it will be less. So whatever they need to buy in options, there will be less options for you. So the caps may reduce. So the conclusion of between these dance between the Feds and the fixed index annuity, if you want your money protected and you want to make sure money that you have in CDs, money markets, that the interest still is going to start dropping, they're not going to make money, you want to move the fixed index annuity, we may need to do it soon, right? Remember, this is no recommendation. So you need to come to us. We will able to analyze what is happening, what are the goals, and where you want your money to be focused to, and we'll be able to look what will be the best for you. But right now, the fixed index annuities will get affected by the interest cuts that they may happen in the next month. So remember, timing matters in this type of situation. The timing, it means that be in communication with your advisor, be in communication with us, give us a call anytime, send me an email, and we'll be able to analyze that part of the money that you wanted to be safe. Especially with like ups and downs of the market, we want a portion, if we are close to retirement, a portion to be safe and have consistency, right? Remember, fixed index annuities are safety first, growth second. We want to be consistent. We want to make sure this part of money stays with us, and a reasonable growth, but also it stays with us during long term. And we have higher growth potential whenever higher interest rates, and whenever the lower rates, the less growth potential the fixed annuities have. So this is what we wanted to talk today, fixed index annuities. I thought there will be a good topic just because we deal with this. A lot of clients have it. A lot of clients ask about it. And with everything going on with the interest rates, we'll be able to help you. So thank you so much.
Okay. All right. Thank you very much. Well, I appreciate that. Fixed index annuity, part of a plan. It's not all of a plan. It's usually a good part of people plan if you're looking for asset protection or if you're looking for that guaranteed income. So thank you very much, Will, for that information on that. I'm going to talk a little bit about what's going on, kind of current events over the last couple of weeks. First, let's talk about the Federal Reserve. Last week, they were out in Jackson Hole, the symposium. At that point, Fed Chairman Powell makes it sound as if though there is going to be a drop in the interest rates. The Feds will start to drop. A lot of people are looking for big. In my experience with the Federal Reserve, especially with this chairperson, he moves very slow. So don't go out here expecting that we're going to have a 0.5% move. If it is, it's going to be a shock to some of us. Some are expecting it, but it goes from there. But I believe that they will start lowering and to go lower over the next couple of years on a very slow basis. I said, I think about the only thing that he is probably happy about is President Trump has moved his shift to Lisa Cook within the Federal Reserve. So that I do not believe is a very strong play or a good play. I think it can cause problems in the future. I think we need to let the Federal Reserve do what it's supposed to do and not be subject to which political party is in the current office at that time. So we've had a little bit of that this week, a little flatness in the markets. NVIDIA reported earlier today for what, I mean, excuse me, NVIDIA has reported their earnings weren't quite what they expected. When you set the expectations that high, it's harder to beat those. It's harder to beat those numbers. So we start to look at it and go, where are we at? And that's where I start to look at people when we start to talk about risk tolerance. Where are you at with risk tolerance? Because it's amazing to me. I've been in the industry long enough that when I ask somebody what their risk tolerance is, whatever the market is currently doing at that time, if the markets are way up, they're very aggressive. If the markets are down, they're a lot more conservative. So it depends on what's going on out there in the market when they answer that question. But I have to look at it as if when we had that little Liberation Day drop, what happened to you? Where did you hit it emotionally? Did you think it's time to head for the hills or to back off? Or did you say, nah, I think it's okay. We're going to be fine. Everybody's emotional reaction to something like that is different. But if you had that big emotional reaction to it, I'd say let's get together and talk about it because I think re-examining your risk tolerance is very, very important because most people are willing to go for broke when the market's going up. As soon as those markets start to retreat, they get really scared. And I think that we have to look at it and say, where are you at? And are you properly within the market? Are you too much at risk? Do you judge your day by what happened in the market? Are you going to have a good dinner tonight because the market was up? Or are you going to have a bad dinner market on the days when it's bad? So you have to look at that and say, let's adjust your risk tolerance to where you're at, not what we are, what you're at, so that you can be comfortable. And that's what I love about Market Guard. We've got all kinds of portfolios. I can get ultra conservative. I can get ultra aggressive. I can do either side of that equation. And the thing that I like to look at it, because I've analyzed a lot of portfolios, I see it too many times when every account is invested the exact same way. Be it Roth, be it non-qualified or after-tax money, my traditional IRA, my 401ks, they're all invested the exact same way. I'm going to say that might not be the best process to look at. I like to look at what's the time frame of those assets. You know, the best asset that I can have, Roth, it's never going to be taxed. Second best, non-qualified. Something happens to me and I pass away, goes to my wife, she doesn't do anything with it, she passes away, and then it go to our kids. Under current tax laws, there would be a step up in basis and nobody would owe anything in taxes. So those are the things that we get to look at when we start doing the analysis around a portfolio. And I think that's more than just about rates of return. As somebody said, it's not what you make, it's what you get to keep that counts. And the only money that you can actually spend is after tax money. I had mentioned it was Will. I got to do my second 29029 event. I spent the week with my wife and my father-in-law and mother-in-law. Fantastic week. You know, Whistler is probably one of the most beautiful places you can go. You know, the glacier ice up on top of the mountains, you know, years, you know, and it's still sitting there and it's in the summertime. So it was beautiful. Green Lake, you can't swim in it because it can get you hypothermia because the water that comes into it drains directly from the glacier. So it was beautiful. The event was tough. 4 miles, 4,000 foot elevation gain. is a lot of work and it can get very, very tough. So it went from there. Legs got going in one area and it was just to the point of go through it. Work yourself through it. It'll work itself out. I did, and I got to finish, and I got another red hat, and I'm really proud of that. But the idea around it of it is what's your why? Why are you going to do something? I don't care if it's I'm starting a business, I'm doing an endurance event like this. What's the why? I paid to go to Whistler to climb that mountain, and a lot of people think I'm crazy, and I'm okay with that. My why was my little sister. She had passed away from cancer. She had to go through much more than I ever dreamed of walking up a mountain. More pain, and she didn't ask for it. She just had to endure it. And every time my mind would think, this is hard, I would think of Susie. So I'm saying, whatever you got going on in life, your why is very, very important on how you can keep going. Because I think when we stop the focus on the why, the obstacles get in the way and we decide that we don't want to go any further. So again, it's a very physical event, but a lot of it is what I can learn from what's between my ears. So it goes from there. So 29929, fantastic event. If you ever want to do it with me, give me a call. We'll figure out how we can get you in it. I got to know early. Got to know early. The other part that I do with that, I do donations to St. Jude Foundation down in Memphis. During this time frame, if anybody goes to my St. Jude website and donates on the website, I will match your contribution to St. Jude's. I will do that through the New York Marathon, which I wish I had about a week off to rest, but I don't. I get to start right back for that New York Marathon that runs in the first weekend in November. So we do have some events coming up this next Friday, September the 5th. I don't want to tell anybody, but that's also Stacy's birthday. Don't tell her I told you. That's her birthday. Scott Stream is going to be coming in to present to the office from about 3 o'clock to 6 o'clock. Scott usually starts around 4 to 4:30, and he's going to talk about Medicare. He's going to talk about Medicare supplements and Medicare Advantage plans. Any changes that are going on from what happened the year before, he'll talk about it that night. He's going to talk about both sides of it. One's free, one gives you a cost. How does it affect? If you're already on Medicare, it's not set it and forget it. You can come in. Scott does them for me. We don't do them here at the office. He does that. And he does any of my health insurance. We also have our 15th anniversary dinner on the 15th. Well, our 15th anniversary, it's actually on the 18th, but you have to call to get a reservation. It's at the Marriott West, predominantly for clients, but we can have some guests come to it. And then we do taxes and retirement again at the end of next month on September the 23rd and September the 25th at Stone Summit out in Wentzville. We will have the taxes and retirement presentation going on at that time. Again, thank you, Will, for going to Whistler with me. Like I said, it's a lot more than just a physical event. It's a mental event. And I appreciate the fact that you came out and went with me. And, we can always do it again. If you'll just say, yes, I'll use this film for the rest of your life to go ahead and cut it. But I won't put you in a box quite that bad. But yes, if anybody wants to do that. And I want to say business as well. We are going to have an announcement. We are going to have a new employee. So please watch your weekly market update to find out. We do have a new employee that's going to be coming in on the advisory side and be with Will and I helping take care of clients. It is a female advisor for those females that said, why don't you have a female advisor? Well, soon we will. So we'll have a female advisor. will. If you know anybody that Spanish is their primary language, please, we'll speak Spanish. Let us know, because it's so much easier to talk about these things in your primary language, because I do have some people that I've dealt with over time that English wasn't their primary language. And it's a lot harder to do. It's a lot harder to do. So I just want to say thank you, for all the referrals that have been given to us here in 2025, because working with people like you is what we want to do, family and friends. And we just thank everybody for being a part of our family.